Hey guys, how's it going? Welcome to the emergency meeting, and we're gonna get things rolling in just a minute. I'm just still setting a couple of things up here in the background and also setting up the stream. But after that, we're gonna get right into the discussion in just a moment. Yeah, we're gonna speak of a couple of different things today. Firstly, gonna of course recap a couple of ideas that happened during this week, and also just a bit of expectation for next week, of course, so you guys can prepare properly. But of course, I mostly want to speak of the things that happened this week because obviously, the movement that happened, it was easily seen and easily predicted. But as far as I have seen it, because of course, I'm also looking at how others are trading. Like I'm also sometimes looking out in the industry, and I can tell you, not many people have been noticing the buying trade on gold for some reason. So we're gonna touch base on those sort of things in just a minute. All right, just a minute, guys. I just gotta remove a couple of things on my chart, which obviously I cannot show on YouTube. So gotta clean this up a bit. All right, and now I'm gonna go to the screen. Just a minute. There it is. So yeah, let's just recap firstly the technical things that of course happened. And I'm gonna also pull up the other thing, which is the signal that happened, of course, which is going to be, I mean, of course, the thing that I shared earlier in the Telegram, which is this one here. And also we had this one right here. And let's also take a look at this one right here, which is a previous one. And also let's pull up the This one right here. All right, so that's gonna be the charts I'm gonna speak of firstly. And yeah, basically what I'm saying is very early on, beginning of this week, no one really been expecting the buying trades, but of course I can show you very quickly that it was absolutely expected to have some buying trades. The fact that, probably 90% of the traders had literally no idea that gold is going to be moving higher. It's pretty crazy, of course, but of course it's kind of expected to because majority of the traders are naturally going to be wrong. And that being said, why was it expected in the first place that gold is going to be moving higher? Like, there's a couple of reasons to it. Number one reason is obviously the FOMC event. And what has been spoken of on the FOMC event is what has been leading up to the higher prices because they have been indicating a potential rate cut. And of course, we do understand that whenever the Fed would be cutting rates, it's of course expected for the price to be moving much higher on gold very often. While on the other side, which is of course very common information, if there's would be any sort of rate hike, of course in that case, gold is potentially moving higher. So that's the first thing that is going to be something that's pretty interesting and we had to notice. So keeping off with FOMC event, FOMC was published on Wednesday, which is of course the main reason why the bigger impulse move and everything has been moving up ever since from Wednesday, because simply that has been the main time of the market when things have been on the fundamental side that was planning to move things to the upside. And the other thing, of course, why the market was moving higher is obviously if you take a look at the analysis on the high time frame. As far as we take a look at everything here, not that I did mention quite a lot of times, and once again, it is absolutely interesting that so many people just ignore the easy concepts very often. But of course, one of the main things that have been happening is once again, I can show you guys the easiest concept that I've been showing earlier, which is of course understanding the key levels in the price. What is the key level and how is that confirming the higher prices on gold? Well, of course, this has been the lowest point here in the first place during this entire week. And of course, something I'm noticing right away is this price point that the market was just reaching here, which is, just here at this point. Something you're gonna notice is a specific number that the market has been reaching over and over again in the past. And what is also happening here is the same price point where this has been reversing, which is to be more specific, would be the 3300. So 3300. This specific price point is going to be very important and it's going to be something that was confirming the entire idea of why this week the market was expected to be bullish in the first place. So that's also like the beginning reason of why I have been considering price to be moving higher, and of course why this signal here, this one, was sent in the free Telegram group because of that exact reason of the market, of course, reaching this very special number. And of course, the 3300 is something we already spoke of 2 weeks ago when we had the last live stream, is how important these round numbers are in the market very often. And what is the main concept I'm interested in here? Why is this 3,300 important? Well, obviously it's a round number in the first place. It's 3,300, exact round number. But aside of that, what is the other thing that's very interesting is if I'm looking at the market in the past, and this also goes into any other concept, it's not only this concept. If I'm looking at how prices working with any sort of concept, like, we could be speaking of um, market volumes, we could be speaking of breaker block, we could be speaking of fib, anything, a market gap, or any sort of concept you're referring to. The main reason any sort of concept would be first considered by you, and you would be interested in anything is because something is happening multiple times over and over again, repeatedly, and you start understanding that if something is happening over and over again, consistently repeating, it becomes something as a system. So what is the system behind this 3,300 level? Why is this so important right now? And how was all of this confirming that price was to be moving higher? Well, if I'm looking back at the chart in on the left side, so that's the other thing. Anytime you're gonna be looking to the left side of the chart, those are the things you gotta be interested in to be predicting the future. So every time, just look back at the left side of the chart. So start looking backwards in order to determine the future of the market. So that's the 3,300 again, round number. But as I'm looking backwards to the left side, I'm noticing something that's a very noticeable fact here. To me, it's getting very suspicious that this exact price point has been reached over and over again, multiple times, and anytime the price has been reaching it, it has been creating a sensitive area. And let me show you what's happening here. So this here, now we're gonna, understanding is round level, but of course, now we're gonna start looking backwards with the same approximate line. And this is exactly something we spoke of in the very beginning when we had live streams 2 months ago, or when we had the live stream here, and also we had the live stream here. Same thing, guys. It's repeating in history again. This same exact price point is the main sensitive area on gold. So why was I be looking at a buy trade? Why is it that I've been sending the signal, of course? This one, that exact reason, guys. And of course, like this is not just the only reason. Like I got like 20, 30 different other reasons, of course. But of course, this is the main surface level understanding of something. Because really the biggest problem of a lot of traders, I would say, is it just not understanding price in the first place. Like if you're just not understanding price and you just have no freaking idea of what the hell is going on in the markets, like how can you even have any sort of market opinion? So even though this is a surface level understanding and just speaking of this past support, market touching the same 3,300 level over and over again, yes, it's true. It is simplistic. It is only surface level understanding. It is just only one single thing that I'm considering out of 50 plus different things or 20, 30 confirmations on a trade. But of course, this is the minimum you got to understand in the first place. And the unfortunate thing is, which I just keep mentioning every single time, to me, in my experience, what I notice a lot of times is very often the simple thing that is already in front of you are just ignored for some reason. Like, I guess that's human nature. What is simple is just something we tend to ignore and it's something we tend to overlook. But of course, I can tell you and I can recommend to anybody in this meeting, as far as you want to have a first initial understanding of the market in the first place, just to have an approximate ID, the round number, which is, 3,300, 3,400, 3,500, and this is simple information. If that is in line with a potential level in the market that is reached over and over again, which, you can perfectly see here, that's something you might want to consider as a sensitive area. And you start getting interest in how you move forward from that point onwards. So that's something you guys got to think of. Yeah, so this was basically the main level here. And of course, I won't be touching base too much on these other things that, confirmed the trade. But of course, like, yeah, the trade was missed. It's fine. It's not a big deal. The trade was missed. It's still something that confirms and proves the understanding of the market, because as far as you're able to notice a direction, you're already so much ahead of everybody else. So even though, like I mentioned, even though the trade, as per the signal, like, of course, I took a trade on it. I take trades myself. I take a bunch of trades. But of course, despite the trade being missed, it's still something that is building a confidence in terms of understanding where the price is moving towards. And even have to think of this in terms of a psychological perspective. Like, I would bet absolutely that a lot of people have a lot of analysis that is roughly okay. They understand where the market is moving towards roughly, but they might not exactly get the trade at every single time. However, as far as you're able to know the market approximately of, okay, this is what's potentially happening, this is where the market is moving to approximately, you should be already in a very confident state in your trading psychology. And you can of course stop fearing trades. You're going to be more confident in analyzing, because of course you understand in the first place that you see something in a way that is highly likely going to be happening. So the fact that this was missed is not a problem to me. Still something that is psychologically, and in terms of the trading confidence side, that's what I'm speaking of mostly. The trading confidence is something that should be elevated to you. Yeah, that's the first thing I wanted to cover today. Other thing, aside of speaking of what happened next week and just bragging of how perfectly I understand the market direction, aside of all of that, let me just cover a bit on trading risk management, because as I'm sending these free signals basically, and most of the reason why I'm doing this free signals a lot of times is just really just giving value to everybody for free. And of course, it's really a direct proof of understanding the market, of course, because of course, if you're able to call a market, if you're able to provide a trading ID in front of over 60,000 traders live as it happens, it of course proves that you know something. So for me, it's also like a proof that I know what I'm doing, and it's like an undeniable skill proof. So that's mostly why I'm doing it. But aside of that, of course, I do understand a lot of people are taking these trades that I'm posting in the Telegram, and of course that's totally fine. That's pretty much what the purpose of a signal service is. A lot of times, even though this is free, some people do take the trade. But what I notice very often is people just take trades on some of the trading ideas that is like a full margin trade, or just taking an all or nothing trade, or going with a massive risk. And that leads me into speaking a bit of risk management, because even though someone is able to trade, and you're going to be learning something that is working, and you can learn something that's going to be giving you trading opportunities consistently, end of the day, you gotta think of risk management very heavily. And especially the trades that I'm giving, like of course, when people see that trades are winning over and over again, they tend to be taking a higher risk on the next trade every time. Like that's what I noticed personally, because the messages I'm getting very often is, I would be giving like two free profitable trades, which obviously is going to be winning. And after that, I might be giving like a losing trade. But as I'm giving a losing trade, I usually get like a message that, hey man, I blew my account on this trade. You took a loss, you blow my account, stuff like that. And that is really something that is coming down to your risk management. And this is not only about me sharing trades to you, but it's also something that is about your own trading, because you just cannot go into taking positions without any sort of logical risk management, of course, or proper money management. Because otherwise, if you're losing the trading funds you're trading with, you're gonna be left with nothing to work with. Like you gotta imagine your trading funds as something that is your tool. The trading funds that you have is basically a tool for you to work in the market. Like, if someone is a painter, they're gonna have a painting brush. That's gonna be the tool for them to work on a painting. Or if someone's a football player, then obviously the football and also the football shoes or the soccer shoes, whichever you want to call it, is gonna be the tool for you to keep on doing the things that you're doing. And when it goes to your trading account, you gotta treat it as the tool and the access for you to be making profits. And if you're losing the tool that you're making profits with, you're gonna be stuck and you're gonna be lost in the markets. So that's of course the first main sort of suggestion of why you'd want to have a proper risk management. And I do understand everybody wants to make a massive profit in just a couple of trades. It's totally understandable that some people tend to take larger risk than others because they want to make massive profits. And of course, if someone has a relatively smaller account, maybe in the tens of thousands, or maybe even if it's just a couple $1,000, everybody wants to make a massive profit on it. However, you're going to be taking such a massive risk that eventually you're just over leveraging it. And if you're losing it, you just cannot move forward at all. And, it's small profits, small and consistent profits are getting you much further. And, aside of speaking of that, this also ties into the percentage of risk you should be taking. So, now the next question is, all right, now that I'm telling you that you should be taking a smaller risk, what is the risk you should be taking? What is the risk percentage I'm recommending personally? But personally, I would be recommending 1%. And why is it that I'm recommending 1%? And also, do not take this like this, that it's only 1%. The percentage you're taking on the trades, it's also dependent on your trading system. So the truth is behind the 1% risk, very often it's not even about just one size fits all. It's not even about just taking half percent risk or taking 1% risk or taking 2% risk. It's not a set number. Usually it's going to be based on your trading system's profitability. And let me try to give an example of this. Let's take a look at a let's take a look at an example of a funded account, which is or like a challenge. Let's take a look at an example of that. They also have like risk parameters, like you can be risking or losing in drawdown 5% a day, and you can also be losing 10% total. So that being said, there you're also going to have a risk management plan in terms of how much you're going to be risking. So let me show you guys something in the first place. And I'm gonna share my screen again in a second. I just stopped sharing it. But I'm gonna show you guys something in terms of the risk percentage of how and why you should be setting up your risk percentage based on a statistical system. All right, so let's take a look at this. And let's speak of it again in a challenge perspective or a funded account perspective, because a lot of times if people are trading a personal account, I tend to notice that on a personal account, risk management isn't really something you guys manage to focus on immediately because there's no consequences if you lose a bigger amount. But of course, on a funded account or a challenge, you're gonna be having some consequences if you're risking more because otherwise you're gonna be losing the account, and of course you're gonna be violating the risk percentage. So when I've been saying that you should be risking 1% on most of the times, I gotta sort of correct myself on it. And some people said when I mentioned that, some people were mentioning that, hey, instead of 1%, what if you risk 0.5%, or what if you risk 0.25, or some lower percentage. That really depends on your trading system. So what is this statement by me that is depending on the trading system? Well, when you're trading, and let's say you have 100 different trades, from those 100 trades, you're going to be, of course, having a clear data of what is your maximum consecutive losses, what is your maximum consecutive events, what is your average consecutive losses, and what's your average consecutive winning trades. So when it comes to taking the percent of risk, that's how you can determine it. Let me give you an example. Let's say you're going to be having a trading system that's having the average consecutive losses of 5 consecutive losses. So 5 losses coming after each other. That could happen. In that case, if you know that your trading system is capable of producing, for example, 5 consecutive losses statistically, because we are speaking of a statistical approach here. We are not just randomly throwing numbers around the place, like, 0.5%, 1%, 2%, especially on the fund account and especially on the challenge. You first got to analyze the things that you're doing yourself. And then you're going to go here using the trading application, Equity Simulator. You're going to just input your numbers and you're going to find out immediately, should you be taking a lower risk percentage, or should you be taking a higher risk percentage, or can you be taking a higher risk, or should you be doing anything else in your trading plan to adjust something. So, naturally, that is coming down to your own trading systems results. So how do you get it? You gotta trade, and once you take like 100 different trades, from 100 trades, you're gonna have a data, and from the data, you're gonna be understanding what are you capable of doing, and why is it this way? Why do you have to look at the data in terms of what is the average consecutive losses, what is the maximum consecutive losses of your trading system? Because the thing is, like, let's take an example here. So let's see why, if you're just looking at the win rate of your system, why sometimes you can get confused with it. So let's suppose that I get like a 100K account, and let's suppose I got a 50% win rate. It could happen. We have a 50% win rate. Um, on average, it's a very good result. Of course, you're gonna be finding out pretty soon that with a 50% win rate, you're gonna be, of course, profitable. However, the thing is, you also gotta look at the numbers in terms of what is the trading system giving for you as a drawdown from that trading statistical results. And of course, if you're gonna go here, I can easily find out that hey, with a 50% win rate, I gotta be freaking careful with it because the average showdown on it, it can be easily 6% anytime. So that means if I'm taking trades on the regular, I could be facing a 6% drawdown with a 50% win rate. So I gotta be much more careful with the risk I'm taking. So in that case, I might want to reconsider the percent of risk I'm taking with a trading plan to reduce the average maximum drawdown on it. So, let's say that in this case, with 1% risk, I'm getting a 6% drawdown on average. That drawdown figure is, of course, higher than the 5% maximum daily loss figure. So obviously, I would be breaching that one due to the 5% daily loss. But of course, if I'm going to go ahead and now reduce my risk percentage from 1% risk to 0.5% risk, this 6% drawdown is able to change to 3% average drawdown on the trade. I mean, average on the trading plan. So in this case, I have been able to determine that, all right, I gotta reduce my risk from 1% to 0.5% in order to be more successful and more consistent on the funded account. So that's mostly how you're able to determine the risk percentage you should be taking based on a statistical approach, because of course you're just unable to randomly throw numbers around, of course. But in case your trading system is just simply having a higher win rate, your drawdown is going to be lower. So if your win rate is much higher, of course, you can be taking that 1% risk and you do not have to worry of breaching the maximum daily loss because you're not getting close to it in a statistical perspective. Let's see if I can input 0.5%. Oh yeah, see, so basically in this case, if I would be risking 0.5% with the exact same win rate and the exact same risk reward and everything, with 0.5% now in this case, obviously the average drawdown is telling me that I'm still in the risk parameter, and I wouldn't be losing the 5% daily loss figure on the funded account. So this is mostly how it's best determinable of how to create a risk management plan, of course, because like I mentioned, the average recommendation and the average industry recommendation is of course going to be 1%. However, some people, according to the trading system, um, they might want to change the risk percentage that they are taking, of course. So it's something you got to think of. And of course, if your win rate is going to be much higher, like even with a much higher percentage of risk, you're not really going to be facing that big of a drawdown. So in this case, 80% win rate, it's only just 5% drawdown, right? So you gotta play with the numbers, of course. So you guys, feel free to go here, just check this out in the trading apps on crowdfunded, and you guys can have a very, very decent perspective of what the risk percentage should be and how much should you be risking on your trades. So that's something I wanted to cover regarding the risk management. Other than that, yeah, that's pretty understandable and should be pretty simple. Aside of that, quick a quick meeting for the weekends on some risk management and also some market recap. I'm thinking to make another meeting probably tomorrow, or maybe Monday, because I want to do like a YouTube live stream of market analysis in terms of what is expected to be happening next. So that's gonna be something I'm planning to do. On Tuesday, yeah, on Tuesday I'm probably not gonna be doing any YouTube live stream because on Tuesday I'm opening the one-on-one program interview applications. So I'm gonna be probably mostly busy with the interview applications for the one-on-one. Yeah, one-on-one is truly a different program. Like it's just unbelievable of how many things we speak of there. The concepts we speak of there is just truly unbelievable. And of course the consistency, or not to mention the daily live trading sessions we do every single day. So yeah, that's gonna be launching on 15th of July. So it's gonna be Tuesday. Just letting you guys know, so you're not missing it. And let me also just touch base on the fee for the one-on-ones. A lot of people are asking this. The fee is obviously 5,000 euros. It's of course refundable if you're not selected into it. And of course, it's also given back to you once you become profitable. So, you're technically not even spending anything. But yeah, 15th of July, so it's gonna be Tuesday. All right, guys, I appreciate tuning in. And you guys are gonna see liquidity trading gonna be pretty huge pretty soon. So, do not sleep on it because the trading skills here and also the knowledge here is unseen in the industry. Like you guys gonna see liquidity trading gonna be freaking huge. So guys,